Good morning, all. I hope you are well, and I hope you had a great weekend. And welcome to today's video. So today I have three pairs on watch, and those are pound Swiss, Swiss yen, and pound dollar. So I'm going to break them down for you now, give you my thought process, and tell you what I will be looking for from these pairs today. So pound Swiss, not one I have on watch all that often, but as I've said before, every dog has its day, and today that dog is pound Swiss. Okay, right, so I'm going to break that down for you now. So what do we have? Why am I looking at this pair? We have this impulse up followed by this correction. This correction is very wide relative to the impulse up, but then we do have to factor in the fact that this is pound Swiss, which is a pair much like pound Kiwi and a few other pairs like Aussie Kiwi rather, which does seem to correct sideways for a longer period of time before we get potentially what we normally look for, that impulse correction continuation. Some pairs correct sideways for longer than other pairs, and pound Swiss is most definitely one of those pairs. So we have this impulse correction potential continuation, and one of the reasons that I think that is likely is because we have this first touch, this first drive, we come back down, second drive. You can see as well, just to touch on it, so we have this first drive, second drive, and then the third drive. The second drive, notice that the second drive near misses to this area. If I just drill down, that might be a bit more helpful. So if this impulse up, then we have a sharp move down. The market has left a footprint, okay? The market is always leaving footprints, clues. So we have a sharp move down, sharp move up, giving me a clue that this is likely where there's a lot of liquidity, and giving me a clue that this sharp move down, sharp move up makes this a valuable area potentially for a buy. So we have that drive there, second drive. We also have that middle section, okay? So by middle section, I mean we have an impulse correction continuation, which typically speaking is the second touch of a piece of structure. So if we then come down to this area again and potentially tap into this area, that means that this is potentially a completed structure because we have a 1, 2, 3 with a 1, 2, 3 middle section. Okay, so just analyzing the waves, what happens? We break below. What do we know about the higher time frames, which I'm always speaking about in my videos? Typically speaking, these higher time frame liquidity points, we tend to break below them if we're going to rally to the upside, and tend to catch people, what we call catch people, the wrong side of the market, who believe what was previously support becomes resistance rather once price breaks below. So they start selling, and in the majority of cases, we use the structure to determine that these people have been caught the wrong side of the market, and then in the majority of cases, price pushes up to the upside. And another factor that makes me think that is because we have a near miss here to the upside. Okay, so we have a near miss to this area. When price comes close to an area of value but doesn't quite tap into it, it makes it more likely that we will rally to the upside to take out this near miss. Okay, and if we just measure, there's another thing which I factored in when I was doing my forecasting. If we just measure this impulse, so I'm measuring from here to the base of this correction. If we just measure the length of the impulse out, okay, so if we assume that the impulse started here, that lines up perfectly with where price actually is, giving me a clue that this impulse correction continuation has potentially completed as well. Okay, we can tend to push a little bit lower. Sometimes we measure it on the break of the correction, because the volume that's been built up within a correction can help determine how far down the move is going to occur. But we've fulfilled this move. The point is, we've fulfilled this move from there to there, so that is enough. Okay. And if we just look on the monthly chart, I was just looking at this before I went live. What do we have? We have this 1, 2, 3. Okay, price breaks below, washes everybody out, and then pushes to the upside. Okay, if we just measure this, we also have a middle section within there. Look, 1, 2, 3, giving me a clue that this is a completed piece of structure. So these patterns that we look for are always repeating themselves. Okay, we don't know exactly how price is going to do what it's going to do, but we can have a good indication that it is going to do what it's going to do based on the structure that we've seen in the past. So with all that in mind, what I'll be looking for is the following. I'll be waiting for a push up above here, okay, followed by a flag. So a push up above this area of value followed by a flag. We may not get that by the end of the day. We may not get it at all. We don't know. Okay, but what would happen if we pushed up above this area of value and we had a flag, then we would have retraced. We have to remember that this is quite an impulsive move down. We would have retraced all of, if I just zoom in a bit, we would have retraced 50% of the length of the body of this previous weekly candle. Okay, and typically speaking, if we're going to move lower, because we have to be neutral enough to remember that this could be, I don't think it is, but this could be some kind of larger bear flag to push lower, because it could be something like that. What I'll be waiting for is price to push above the area of value, because if we push above it, then we would have retraced over 50% of the length of the body of this previous weekly candle and over 50% of the length of this daily candle as well, and obviously the 4 hour and so forth. So that is a good indication. And one of the analogies, you might like this one, but one of the analogies that I use to remind me that patience is king. I don't really have a problem. I don't have a problem with patience at all in trading. That's one of my strengths. But one of the things I like to do to remind myself is that an analogy I use is that you don't have to be the first to arrive at a party to end up the most drunk. Okay, so that's an analogy I use to remind myself that, you know, there's plenty of room in this run to the upside. If we're targeting this area here, for profit to be made, you don't have to be the first to the party. You don't have to be jumping too early to catch that move, because there will be opportunities along the way. So waiting for something as simple as just a break above this area of value followed by a flag, rather than trying to get in down here, is more than sufficient enough. There's more than sufficient enough risk to reward in a move from here to the upside. Okay, so that is what I'm going to be looking for from pound Swiss. Moving on, I have an alert set there, as you can see, just to see if we get close to that area of value, close to breaking above. You can see that we're moving up quite correctively at the moment. So I wouldn't be surprised if price messes around. We are at a very higher time frame area of value. Sometimes price can mess around in these areas, so we shall see what happens. So Swiss yen on the where should we start? If we start on the weekly chart, you can see that we're at this all-time high. So we've had this move up. Price has just been going and going and going, and then we have this kind of high here. Price has broken this higher time frame high. This is a bit more visible on the daily chart as I drop down. There's not a huge amount to see. It becomes more clear. The picture becomes more clear on the daily chart. So but this is where we start to get a bit of structure. So while price was just going up and up and up, I wasn't interested in buying or selling this, because, you know, we need some kind of structure to work with. But now we seem to have some kind of structure to work with. So the reason I'm looking at this is because we potentially have that impulse correction continuation, giving me a clue, given that we're sat above an all-time high, that this if I just take this potential impulse correction continuation has completed, and if we just measure the impulses, you can see that we're sat in that area. We've fulfilled the move. We've fulfilled that impulse correction continuation move. And even if we take it from this low here and measure it to the high there, measure it out, that lines up perfectly. If you remember what I said in my videos on Friday, I believe it was, that lines up perfectly, giving me a clue that this impulse correction continuation is potentially finished, that we've broken the high, potentially caught people the wrong side of the market. Look at the psychology. You can see this even on the daily. We've moved up very correctively, and then as soon as we break above this all-time high, we get this momentum coming. Why? Well, it's most likely people buying the highs that believe that what was previously resistance becomes support once it's broken above, and we're potentially catching people the wrong side of the market again before price comes crashing down. The thing I always ask myself is, if we're going long, okay, so we could be going long, but if we're going long, where are we going long to? Look, there's nothing to the left. So, you know, that's one of the things that we do in trading. One of the things that the bigger players are doing is, when they get in, they're looking at where their target area is. They have an idea because they have a plan that they're working to, the banks and the other big players. They have some kind of plan as to where they're going to get out. Well, if there's nothing to the left, then where are they getting out? Okay, so that's not a place that I would expect them to get in. And one of the reasons that makes me think we're coming to the downside is, what do we have? We have a near miss to here, and we have a near miss to here. Okay, we know that when we have these, price is more likely to find its way down to these areas to potentially take out that low. And that's why I have my target there. We also have, just to touch on it, potentially the start of a evening star, an evening star formation. You can see that. Of course, if this was to retrace 50% of the length of the body of this candle, then that would be a confirmed evening star formation if that was to happen by the end of the day. And you can see, if I just drill down, you can almost see to some degree, I'm just going to drop down to the 1 hour. You can almost see where people thought that this was a retest. Okay, so price comes down here. They think this is a retest, and that's, if you look at it, that's where the momentum starts to kick in. So you can see the psychology of the market over and over again. And with that in mind, what I'll be looking for from this pair today is the following. So quite a simple one, this one. Again, a bit like with pound Swiss, but on the flip side, we're obviously looking for moves to the downside. But if we push down just a little bit lower, if we push down just a little bit lower and we get a flag, then I will look to get short either on the break of the flag or within it. And then I'll be able to manage this. This is just a bit of a corrective move up, but I think the real first target would be, I would say, here. And the reason being is because if you just look at it, we're doing a bit of, this is what we call pattern separating. Okay, so we have this 1, 2, 3, which breaks to the upside. Within that, we have a middle section. I'm just doing this pattern separating on the fly. We have a 1, 2, 3. So when we have a 1, 2, 3 after the second touch of a 1, 2, 3, which breaks to the upside, that gives me a clue that this is a completed piece of structure, which just so happens to retest this high here. Okay, so that is a significant area where I would expect there to be some kind of stall in price. So that is why my first target is there. Okay, so just touching on why I've kind of got that as my first target. And on this particular one, my alert, I believe, was triggered before I woke up this morning, before I got up and checked these pairs. These forecasts were done the night on Saturday morning. So what I've done is I've set, you can't see this, but on my screen at the bottom, I've got my list of apps on my Chromebook. And I just clicked on my Google Calendar app and I set an alert to check a Google Calendar reminder, rather. I set a reminder to check this pair in an hour's time, just to see if we can push a little bit lower to get that flag. And if we do, then we would have retraced 50% of the body of this previous daily candle. And I believe, we would have retraced, if we push a little bit lower, we would have retraced almost 50% the length of this previous candle as well, of this previous weekly candle. So that is Swiss yen. I'm just going to put that back on the chart because I just removed that. So that is Swiss yen. And last up is pound dollar for a potential shorter term play. I say potential shorter term play because we don't necessarily, some of these trades can end up being longer term plays. So what do we have here? Same thing again, right? We have this 1, 2, 3 there. We have this 1, 2, 3 middle section, giving me a clue that this is potentially a complete piece of structure. We break below, wash everybody out, and then we're potentially looking for impulse correction continuation to the upside to take out this near miss. Okay, however, that sometimes we can capitalize on a move to the downside in the meantime. And one of the things that makes me think that is, you can see that we are well and truly in a run of momentum to the downside on the weekly chart. Okay, just looking at the monthly is bearish as well. The last monthly candle was bearish. You can just about see that they're very heavy bodied one. So we may come a little bit lower. And one of the things that makes me think that is, if we just drill down, it's more visible on the daily, is that we have, what do we have here? Yeah. So we have this completed, you can see this completed piece of structure here. So there's not necessarily a reason for price to come all the way back down here because it's fulfilled this 1, 2, 3 move. However, what we do have within that is this sharp move down, followed by a sharp move up on the daily. Okay. What do we have? you can see that we've had an impulse correction continuation to the downside. And if I just drill down, so you can see that sharp hook point more clearly there. Sharp move down, sharp move up. What did price do? Price near missed that area and didn't quite tap into it. And then we have this 1, 2, 3 wave move, giving me a clue that this is completed. We tap into, if I just drill down to the 1 hour, we tap it. What do we tap into? Anything significant? We tap into this area here. We tap into that area there. Actually, that's look at that. That's more significant. We tap into that area there where there was a little consolidation and where price sold off aggressively from last time around. And then we have, what do we have here? We have this. Let's try that again. I don't know what's going on with the paintbrush tool recently. We have an impulse correction continuation, giving me a clue that that is a completed piece of structure. And then we have, what do we have here? Look, we have this near miss again. We have that sharp move up, sharp move down, followed by a near miss to that area. And then we have, this is a bit more voluminous, but we have that 1, 2, 3, giving me a clue that this is a completed move. And then we have this 1, 2, 3 with a middle section in it. 1, 2, 3. See that? Okay. So if we push up from here and we come up to this area to take out this high here, we would have a completed structure, another completed structure. And with that in mind, what I'll be looking for today to potentially take out, if we just measure this, so if we measure this impulse down to the low of the structure there, and we take that to there, that lines up perfectly. But that lines up perfectly with that low that I was talking about, which we near missed to last time around. So these patterns that we look for, you know, there's mathematics behind them. They're not just random. So with that in mind, what I'll be looking for today is the following. So if we get that push, if we push up to the area of value, I've got an alert set there. If we tap into that area, push down on flag, this is an area where I wouldn't be taking a risk entry. So I wouldn't be looking to call the tops and looking for a rejection candle from here, because we're quite far, potentially quite far into this move to the downside. Okay. So I don't want to be trying to, the point being that some price can be a little bit more unreliable when we're quite far into a move, because you have to remember that many people that caught this move to the downside will be getting out their positions, taking profit. So the further into the move to the downside it becomes, the more risky it becomes to take a risk entry in this area, because price can just, you know, move back up and then break back in, as some people that caught the move to the downside get out of their positions, and we can have slightly more erratic price action. So with that in mind, what I'll be looking for is price to tap into this area, push down on the flag, and then the flag afterwards, the correction afterwards will be the confirmation that we look for, those of us who trade the Falcon strategy, that price is not just going to suddenly blast to the upside. We will have washed the orders out, the stop loss orders that were above here. We would have tapped into the limit orders that were above here, and I will be able to manage this down to the base of this structure. If we were tapping into this low, we'd likely take out this one as well. If price was going to suddenly move to the upside again, and I would be able to manage that, and I would be able to trail my stop above here for something in the region. You know, if price tapped into this area, I would have my stop above, no doubt, at that point, and I would be running at something like 5% profit, most likely. So that is the thought process. And then we would have that. So we would have that impulse correction continuation. Okay, we would have an impulse correction continuation. That move would have likely completed. And then we would have had that kind of impulse correction continuation middle section. So these fractal patterns that we look for repeating themselves over and over again, and that is what I'm going to be looking for today, folks. Have a great day. I nearly said weekend then. Have a great day, and I will speak to you again. I will see you again in the next video, which will very likely be tomorrow. Thanks very much for watching.